Assalamualaikum and hi everyone. Welcome back to my channel. I am Madam Yusna Liza Hamid. If you are new here, welcome to the channel. If you are returning, welcome back. In today's session, we are going to learn on how to prepare a statement of cash flows using indirect method. And what I'm going to do today is I'm going to pick up a question from FAR210, question February 2022, where we are going to learn step by step how to prepare a cash flow statement in a method that I call color-coded approach. Let us start by looking at the question. So this is the question I've picked up for you, which is the question from, again, it was question February 2022. So let's look at the question. You have the relevance extract from the financial statement of Pitzer for the financial year ended 31st of December 2020 and 31st of December 2021. And this is the statement of financial position given. And as you know, I have mentioned earlier that this is going to be prepared using indirect method. So using indirect method, the statement of cash flow will be prepared starting with the profit before tax or any loss that you may have in your company. So you have the assets, liabilities, equity here, and you can see that I have color coded this lines of information or the row in each of the assets, liabilities according to certain color that I've used here. So let's see what are in the additional information. So these are the additional information. You are given the statement of financial position for 2 years, and that also is giving you another additional information where I also have color coded the additional information according to certain color coding that I have decided much earlier. So you have the requirement of this question to prepare the statement of cash flow for the year ended 31st December 2021 using the indirect method in accordance with Mfrs 107. Mfrs 107 is equivalent to IAS 7 statement of cash flow as issued by the International Accounting Standards Board. The second part of the question, which is the theory question, I'm not going to focus on that. My focus is on this 15 marks. So let's look at what you have and the first step. So the first step before you prepare a statement of cash flow is to come out with the template or to prepare the template first. And if you can see here, I've already prepared a template, and that template is the template for the preparation of cash flow using the indirect method. So step 1 is to prepare the statement of cash flow template using indirect method, where you can see that I have used the different colors, where purple is for operating activities and the investing activities I've decided to use blue. The financing activities, this is brown, and the last section of the cash flow, section 4, is going to use green. So the first section is operating activities, section 1. Second section is investing activities, section 2. And the third section is section which is the cash flow from financing activities. So that was the template that you have prepared. Make sure that you show the profit before tax or if there is any net loss. And these are the template that you need to prepare first. After you have prepared the template, the second step is, let's say you have prepared this template, you can use the color that you like, or you can also follow the color that I have chosen. So let's say the second step. The second step you can see here is to label correctly the opening and closing balances in the statement of financial position given. It is peculiar that whenever you see the statement of financial position being given, maybe together with the statement of changes in equity, you are likely to be asked to prepare the statement of cash flow using the indirect method. So start by labeling the balances in the soft P correctly. So you can do this here. So I'm doing it. You can see that I've already labeled that for you, where the opening balances is 2020, 31st December 2020, and the closing balances is 31st December 2021. You must get it right. The next one is to determine, which is under the step 2, to determine the net changes in cash and cash equivalent. So cash and cash equivalent is actually the answer to the cash flow statement, where you are trying to find out these three items first, which is the one under cash and cash equivalent, the last three row here. So we're going to find out this. How do you find out this? You are going to prepare the cash and cash equivalent schedule. So cash and cash equivalent schedule, this, if you want detail on what is cash and cash equivalent, you can refer to my other lecture. I will put down the link for you to have a go. So let's look at what you have here. So I've already colored the cash and cash equivalent, starting with the bank balance, the fixed deposit. So the fixed deposit here, you are informed information number 2, fixed deposit qualified as cash and cash equivalent. If it is not stated, fixed deposit is not cash and cash equivalent. So here it is clearly stated, it is cash and cash equivalent. And on top of that, you have another one here, bank overdraft. Remember, this is a liability. So bank overdraft, if you would notice, this would have a credit balance because it's a liability. For bank balances, cash or maybe marketable securities or short-term investment that are peculiar to be classified as cash and cash equivalent, those are the items with debit balance. So you're going to do that. So you have already classified that. As you do that, you can now find out what are the changes in that cash and cash equivalent. So I've done the changes. Since I've done for this cash and cash equivalent, I have also done the changes for other activities. So if you can see, I have done also the changes for the investing activities, operating activities in purple, the financing activities in brown, and also here you have the operating liabilities, which is operating activities in purple, and also the negative or contra asset account to the PPE, that is also under investing activities, right? So I've done that part, but my interest at the moment is to prepare the statement of cash and cash equivalent. So I'm going to copy this, the row that has the green color here, and I'm going to put it at the bottom here. So I'm going to prepare the statement of cash and cash equivalent. So this is a schedule. So the bank balance, remember we have already labeled the balance correctly, that the column which is 2020 means that is beginning of 2021 if it's 31st of December 2020. The column that you have 2021 just now, remember this column here, that is actually showing the end of the year. So let's do that. I'm just showing you the balances given in that statement of financial position. So the first one is 13,000 and 55,000. In terms of the changes, there is a net increase of 42,000. For the fixed deposit, you can see that that was from the information in the question. So that was in this section here. So the difference is 7,000. So the difference means the net increase. If you have a net decrease, put it in bracket, but here it is a net increase. So net increase, leave it as it is. Next one is the bank overdraft. Bank overdraft, remember I have mentioned earlier, put the balance in the bracket to show that was actually a credit balance. So if you total up the opening balances here, total up, you will have 19,600, and the closing balances will show 74,400. And if you can see, there was an increase from the opening balances to the closing balances, 74,400, which is an increase of 54,800. And if you do that, the answer here, which is the opening balance, cash and cash equivalent at the beginning of the year, will be here. I'm going to show it there, 19,600. Cash and cash equivalent at the end of the year will be here, right? It will be here, which is 74,400. And the net changes, remember there was an increase, and this is an increase. The net changes was an increase. So that increase, you're going to put it here, and therefore you have some space here, right? So the space here would be net increase. If let's say you have a net decrease, if this is in bracket, you're going to put this in bracket too, and here it will be a net decrease. So if it's an increase, it will be as it is. If it's a decrease, you're going to put it in brackets. So we have now the answer to the cash flow statement, which is 54,800, 19,600, and 74,400, the last three rows. For your information, the total coming from operating activities, the purple one, the investing activities, the blue, and the financing activities, that is the brown, will come back to 54,800. So you now know the answer to the three activities in terms of the total. So that was step 2 for you to do that. Next one is step 3, where I've done it much earlier to save the time spent in this video. So step 3 is to classify and color code differently the items in this financial statement and additional information. So if you can see here, I've already done the classification using the color coded method here. You can see, and I'm now showing you the part on additional information. The profit before tax is under the operating activities, because as you know, the starting point for the indirect method starts with the profit before tax. So you have this 213,640. This would be the first thing that you are going to include in your item here, which is in your cash flow from operating activities. You just take that figure from the additional information. In some questions, you may notice that this is not given directly and you can work it out. I have few videos that show how to actually derive the profit before tax. Number 2, fixed deposit. We have already done with that. So these are actually things that we have already analyzed. And this is also things that we have already analyzed. For things that you have already analyzed, put a tick there. For example, these are also things that you have analyzed much earlier, which is your bank overdraft, your fixed deposit, and your bank balance, right? Now we go on looking at number 3 here. Number 3 is from investing activities. Investing activities are things that relates to acquisition and disposal of non-current asset, like those PPE, IP, or the intangible asset, long-term investment, and also things related to the investment income coming from dividend received or the interest income. So this is just a single statement of cash flow, which is prepared for an individual company. So we're not going to touch on consolidated cash flow here. This is just cash flow for a single company. So this item that you can see here is the one relating to investing activities. And you can see that one item that I color coded in turquoise, or the light blue here, which is showing the current year depreciation expense. For your information, maybe you have already gone through the lecture. The example of non-cash expense is the depreciation, as well as other items like gain or loss on disposal. The next one, number 4 here, is there is a repayment of loan. Items relating to movement or the changes in the financing activities, things that are related to the non-current liabilities changes that may have involved cash. Here, a bank loan is a non-current liabilities. It may also include issuance of shares, which relates to issuance of ordinary shares, preference shares, or maybe things related to right issue, or also other items like purchase of own share. But in our case, you have the repayment of bank loan. You can also have issuance or redemption of debenture to be part of financing activities. If you're interested further, please go and check my detailed lecture on statement of cash flow. The fifth one, this is dividend. Dividend is under financing activities. So under financing activities, apart from the movement in the non-current liabilities and the equity that may have involved cash inflow or outflow, that dividend that are being paid by the company to the shareholders are also part of financing activities. And you have the last item here, number 6, tax expense. This tax expense will be relevant for you to calculate how much is this tax paid that is part of the operating activities. Okay, let's go to step number 4. Step number 4 is for you to reconstruct the T accounts or the ledger account here, where possible, wherever necessary only, to find out the transaction that has cash flow effect. When I say transaction has cash flow effect, that might be cash payments or cash receipts that relates to the investing and financing activities. And also at the same time, you may also come across non-cash transaction and non-operating items that somehow have cash effects under investing activities that may also affect cash payments and cash receipts. So we're going to look at that. So let's start off with the operating activities. We have done only for the profit before tax, remember, and I'm now going to do what I call the bottom up approach to prepare the cash flow, where I will start from the bottom. Remember, I've already completed the last 3 rows here, and I'm now going to do the cash flow from financing activities. And remember, this is relating to the equity and the non-current liabilities, where somehow it involves cash payments and cash receipts. So let's look at the first item here. You have the first item, ordinary share capital. You can see that there is a change there of 100,000. And if you check the question, nothing is informed regarding what caused the changes. If you're not informed, you would assume that the changes in the share capital here would be due to the issuance of share for cash. So basically, this is going to be treated as under financing activities, proceeds from issuance of share, where the different will be treated as the proceeds from the issue of share. So for proceed, where that will give rise to inflow, I will use blue. So I'm using blue. You can see that I'm using blue to differentiate between the proceed or the cash inflow, and later the outflow I'll be using red. Okay, so let's see what I have done here. So if you are interested to see the reconstruction of the account, you first will put the balance on the credit side, the balance as at beginning of that year, and that is going to be given in the question. It was 264. After you put the balance carried down on the debit side, you get 364, and that difference is what we are going to conclude as cash receipts from the issuance of share. Check if you have any bonus issue, check if you have any right issue, check if you have any let's say purchase of own shares or maybe treasury shares being involved. But in this question, none. So this bank is what you are going to show here, which is under your so-called financing activities. Done with the first one. Let's look at the second one, which is on the general reserve. So general reserve has nothing to do with payment or receipt, because this is actually the transfer made to or from the retained profit. So here the changes that may have caused the general reserve to increase or decrease apart from the transfer is the so-called bonus issue, if that utilize the general reserve. In this information, nothing is trying to tell you about that usage of general reserve for the bonus issue. So there are no changes that relates to cash flow. So we are already done with the analysis of this two as well. Now let's go to the retained earnings. So normally the changes in retained earnings are due to the profit being transferred from the statement of profit or loss to the retained earnings, and the changes can also be due to dividend. But in this case, sometimes you may have reconstructed the retained earnings to find the dividend paid, because you need to know what was the dividend under your so-called in financing activities. That is financing activities, dividend paid. But in your case, you do not have to reconstruct the retained earnings, since the dividend is given in number 5. You can see this information number 5. You are directly being informed that 57,400 for the year, which is the dividend, has been fully paid. So therefore, you just pick up this 400, sorry, and you will put it in the section here. And that would give you the dividend paid, which is the dividend paid here relating to the payment under investing financing activities. So that was dividend paid. In case you need to reconstruct the information to get the dividend paid, you can use dividend account or the retained profits. Okay, let's look at the next item. So this is done. The next item is bank loan, which is still under financing activities. Remember, I'm using the bottom-up approach. You can see there was a reduction in the bank loan. 5% bank loan at first was 169,400, now down to 135,400, a reduction of 34,000. Let's see what you have been informed. There is a repayment of bank loan. Yes, you are double confirmed here that the bank loan reduced because of the payment of the bank loan during the year, at the end of the year. At the end of the year means by beginning of the year, this there is an interest, right? 5% bank loan here. You will still have to consider the interest until the end of the year for this 169,400. I will be doing it later. And just focus on the bank loan first. So that was 34,000, and that 34,000 will have to be included here, which is your repayment of bank loan. So I have already prepared it here. And another way of doing this, if you reconstruct the T account, you can do the same as what you have done for your share capital, where you are going to put the balance first at the beginning of the year, the balance brought down, and total up that section of the credit side, and you have the balance on the debit side, and you would see that the total on the credit will equal to the total on the debit, and the difference between the debit total and the balance carried down is actually the bank loan repayment, and that is the one that will be shown under financing activities. Next, so we are done with the financing activities. You can now total up, and your total would be an inflow, and that inflow is 8,600. The inflow of 8,600. Right, now let's move on to cash flow from investing activities. I hope you're following me. Next, so first one is the freehold land, which is the non-current asset. Remember, operating financing activities, we are done. We are now moving on to investing activities, which has to do with the cash flow from long-term asset, long-term non-current asset, as well as dividend and interest received. So let's start with the first one. You have 386, and now down it becomes 477, an increase of 91,000. So that was the changes. So you cannot simply conclude that that was because you purchased the freehold land. You need to go and check. So you have this information regarding the investing activities. Remember the blue here, number 3.1. These were the transaction incurred for the property, plant and equipment. There was a purchase of freehold land during the year. You are informed that freehold land was purchased during the year without telling you how much was the purchase. So if that is the case, you can conclude that the changes or the increase in this freehold land is due to the cash payment. Or sometimes you may also come across the changes in freehold land was due to revaluation of freehold land, but that was not in this question. You can check other question for that. So let's just do that. Freehold land first. Put the balance here. All right, you put the balance at the beginning was 386, balance at the end was at 477, and you were informed in this question. If you read again, be careful with what you are doing. So you have purchase of freehold land, and also there was a piece of land costing 100,000 that was disposed for 200,000. So there were two activities that involve cash flow. One is cash payment, another one is cash receipt. So let's start off with the cash receipt first, because you are informed the land costs 100,000 was sold for 200,000. After we have done number 2 here, we'll get number 1. So let's do that. I'll put that figure 100,000 in my account here. So the disposal here would be 100,000. This is at cost because the account is given at cost. Be careful if you have the account given at the carrying amount. So that is the information. You can now total up this because you want to find out how much is the acquisition of the land during the year. And that acquisition of the land, which is cash payments during the year, was 191. So this 191, you are going to include that in your cash flow from operating activities, and that would be 191, the figure here. And this is what you will write as purchase of land or purchase of freehold land. So I'm going to put the color here. Right. Next is to find out the disposal. So earlier on, you are informed the cost being disposed was 100,000. And you are informed the cash flow that you receive from the disposal, cash flow that you receive from the disposal of the land or the proceed was 200,000. And land is not depreciated, so the total on the credit side, you are going to total it and you will compare with the total on the debit side. You can see there was a difference of 100,000. The difference of this 100,000 is a non-cash item. Non-cash item means this is nothing to do with cash flow, but you need to go and adjust that to your profit before tax, because before you arrive at profit before tax, gain has been included. So this gain 100,000 will now need to be reduced against the profit before tax. So we start off with that item here, which is the gain on disposal of land. Apart from that, we have to also check other items relating to the investing activities. So you have this last item here, which is relating to accumulated depreciation. So the changes in accumulated depreciation may have affected investing activities. That's why I'm using the blue color here. However, the changes here is because of the depreciation charge during the year. 72,000 beginning of the year, and now it is 93,200, the difference of 21,200. And that was depreciation because there were no disposal of plant and machinery during the year. There was just a purchase of plant and machinery. If you see here, purchase, right? So therefore, what you are going to see is that this 21,000 in this information tree here, you have the current year depreciation expense for the year was 21,200, and this is actually a non-cash item, and you are going to include this 21,200 in your adjustment for non-cash and non-operating item, because this is adjustment that you are going to include to adjust the non-cash. So this is non-cash item. The most common example is depreciation. If you come across gain, you are going to deduct. But if you come across loss on disposal, loss on maybe changes in fair value whatsoever, loss on foreign exchange, this also will be included here since these are non-cash item. Next one is we're going to find out the item here for the plant and machinery. So we have done that part earlier for the freehold land, and now we're going to do for plant and machinery. So I'm putting the balance at the beginning of the year on the debit side. I'm putting the balance at the end of the year on the credit side. And here you know that the changes was due to the payment of cash to purchase more plant and machinery. And this question, there are no disposal of plant and machinery, so you just have the total on the debit side and the total on the credit side to be 212. If there is any disposal, you need to include it here, but in our case, disposal at cost, it was zero. There are no disposal to start with. For the plant and machinery, if you are not given the depreciation directly, you need to work out this by putting the balance on the credit side, putting the balance on the debit side. If you have any disposal, disposal of machinery, and you have any depreciation related to it, right, you need to also include it here if you have that. But in our case, it was zero, none. So if it's none, you don't have to put the disposal charge here, but I'm just showing you in case you have. And here, this is the depreciation that you are looking for, that depreciation of plant and machinery, and you have already included here, remember. Next item, we are going to move on to the to the part on investing activities and include the item that you have just calculated just now. 200,000 from the disposal of land, and disposal of land is a cash receipt. Remember the one here, the one in blue here, the one that we have just calculated in blue just now, and I put the same color here. And the plant and machinery that were being acquired is an outflow, so I put the color here to be red, so it's red here, and this will be written as the investing activities, which is purchase of plant and machinery. You can also put those little workings here, so that in case you don't have the time to settle your T accounts, you can do the workings here. Next, I will proceed with the cash flow from operating activities. I will start off trying to find out, as I said, bottom up. I'm now trying to find out the items that is to be after cash generated from operation. Normally, it is interest paid and a tax paid. So let's start off with the interest paid. How do we find out interest paid? How do we know there is an interest paid? Normally, when there are bank loan that has interest rate here, it also shows that there have been interest that were incurred during the year. So beginning balance of the bank loan here was 169,400, and you are being informed here that the repayment of bank loan was at the end of the year. So throughout the year, there has been interest being paid on that 169,400. So let's just open up the interest on loan account here. And that was under, I put it under operating activities. So first put the balance here. So if you see there are no balance because there are no accrued or prepaid interest, right? Okay, let me just put it here. Okay, that one should be blue here. And there are no balance, that's why it does not appear. But if you put 0, yes, it will appear. And the interest would be 5% times 169,400 times 1 year, because that happened at the end of the year. So you will have 8,470. That is interest expense. So this shows the interest expense. We are not interested in interest expense. We are interested in interest paid. So interest paid is also the same, 8,470, since there are no accrued expenses. So you will total up and you will see that the interest paid is 8,470. 8,470 will be included after the cash generated from operation here. Yeah, you will include this figure, outflow. However, the interest paid is a non-operating item, but we adjust that and we include that in the calculation of the profit before tax. We deduct. Now we need to go and add back. So add back means you are going to leave it as your item here. You put here interest expense. How much? The same figure, since there were no accrued expenses. Now we move on to last part of this item. Before that, we will settle one more item here, which is tax paid. So if you can see here, most of the item we have already settled. One, the investing and the financing. You have done that. Okay. You have done that part. This is also done. This is done too. Make sure you tick what you have done. This is also done as well. So I'm just copying the tick that I've done much earlier. Now, let's look at the item tax recoverable and tax payable. This item that I'm going to highlight in a different color. I'm using the color red here, the red color. You can see that beginning balance, it was a tax recoverable debit balance. At the end of the year, it is now the tax payable. So the tax recoverable is debit balance. You will set up the taxation account. Tax payable is credit balance. So let's set up the account that was under operating activities, and I've done it here. Put the balance on the debit side. Okay. And that was tax recoverable. And the balance on the credit side, that is your tax payable, right? Tax payable. The balance on the debit side, sorry, because that was balance carried down. This is tax payable, and this is tax recoverable because beginning balance. So you have the tax expense given in the additional information. So the tax expense here given was in information number 6, 57,360. And you are going to find out how much is the tax paid here. Total up this. And take that total and deduct with these two items here. And you'll be able to find out the tax paid. And the tax paid is an outflow. So that will be included where? It will be included under your cash generated from operation under your operating activities. So I put it here, tax paid, and the amount is how much? We have already calculated much earlier. It was 41,400, and now you will have the item 67,200, which is an inflow. And the item for the investing activities was an outflow of 21,000. And now you have another few things to settle, which is operating profit before working capital changes, where we're going to look at the changes in the working capital. I want you to pay your attention here. Key working capital changes. So what you're going to see is you're going to see whether there is an increase or decrease in current asset, or increase or decrease in the current liability. So you have only a few things left here, which is the item that you call operating asset and operating liabilities. And these are item which is not yet being ticked. So you can see here, inventories, you can see the changes was 8,000. It means that you spend more cash to pay or buy your inventories. So there was this item here. Go and check the changes or the net increase or decrease. And then you have your accounts payable item here. There was a reduction 7440, which shows that you have spent a lot of cash to pay your supplier. Another item here, account receivable, also has increased, meaning that you have actually have a net increase of 10,800. So all this must be actually being analyzed, and now we are going to take note that these are operating asset and operating liabilities. Some other example of operating asset I've included here. Inventories, account receivable are what we have at the moment. And then you have your prepaid expenses, your accrued income. Prepaid expenses are actually current asset. If you have an decrease, you are going to add. If you have an increase, you are going to deduct. And the inventories here, you have the prepayments, accrued income, and bill receivable to be the examples. Then you have your current liabilities, the increase. If there is an increase, items like accounts payable, accrued expenses, unearned revenues. These are items of working capital changes, and bills bill payable, sorry. So at the moment, we just have a few things. So we start off with the first item. Remember the inventories, there was an increase. Increase in inventories are actually increase in current asset. So if it's an increase in current asset, the changes is going to be increase in inventories. How much is it? 8,000. So the increase will be deducted. Next, we move on to another item, the account receivable. Account receivable, earlier we have already investigated this one. Account receivable, yeah, that is, the difference is 10,800. It's the same, which is increase. So you can see the effect here, increase, you will deduct. So I deduct here. The next item is the decrease in accounts payable. In case you have accrued expenses, you have bill receivable, bill payable, you should include here. Or maybe items which are under the working capital. Don't include bank balances, don't include cash and cash equivalent, do not include tax paid, do not include interest paid in this section. Other than that, should be here. Next, the changes would be a decrease in accounts payable. You can check here, decrease, you are going to deduct. Okay, then you can total up the cash flow from operating activities. You have 67,200. You can add up with this. So this is step 5. We are doing step 5 just now, which is to find out the cash flow from operating activities. And you have found out the profit before tax earlier. You have adjusted the non-cash and non-operating item. You have adjusted the working capital changes here. And you also have adjusted the the income tax paid and interest paid. And the last step is to review and transfer the relevant amount. We have done that. In all T accounts, we also have transferred that to the template correctly. We have done that. We have completed the template, and we have already done the subtotal coming from these 3 activities, and it has now come to the same figure, 54,800. And now we are done with the preparation of statement of cash flow. With that, I thank you for watching. I hope this session will help you a lot in your understanding of cash flow statement. Till then, I'll see you. When I'll see you in my next video. Thank you so much.